Welcome to the Daily Download. I'm Travis Fain. Inflation in this country has been at a decade's record high, and corporate profits last year hit a record high not seen by some measures since the 1950s. WRAL News Investigates team took a look at this. Hey, let's be nice. They took a look at this coincidence in a piece this week, and I've got Randall Kerr, the producer behind this, and many of the other big stories you see on this station joining us now. Randall, welcome.
Thanks, Travis.
So walk me through the focus on this story, what y'all looked at and what sort of profits you found.
Sure. I mean, and just to back it up, last year, 18 months ago, 2 years ago, when gas prices started soaring, we did a piece where we looked at oil and fuel companies. How much money were they making? And their profits were through the roof. Obviously, that hurt the general public because everyone needs to drive. And then when we saw inflation really start ticking up, if you look at the trend, Bureau of Labor Services, they produce the Consumer Price Index, and you can filter out the general trend, but what we looked at was food at home. So food that you're buying at the grocery store, not restaurants, not takeout, food at home, stuff that you buy, go home and make. And we saw that starting in about March of 21, it started ticking up. And then it just exploded.
And this is inflation you're talking about, or are these the actual profits you're talking about?
This is inflation for food at home products only. And so we were trying to track, when did it really start? When did we see the warning signs that this was going to be a problem? I mean, grocery bills, you can't walk out of the grocery store now without $50 and you may have a bag full of things if you're lucky. It's crazy. So we wanted to step back and look at some of the biggest food manufacturers that we have in this country to see what kind of profits they were making as the rest of us were paying more at the checkout.
And you found they're doing quite well, I think.
They are. I went quarter by quarter, and then I looked at annual revenues for going back, and you can't compare anything to the pandemic, so we filtered out 2020 just because that's an outlier. And obviously, some of these companies did lose money or not make as much money as they planned during the pandemic. So if they're trying to make up for lost ground, understand it to a certain extent. But what we found is these companies made a lot more than they projected in many cases, and certainly made a lot more compared to what they did in 2021 when things started to normalize a little bit.
Yeah, I think you found that food at home prices were up something like 12% according to the CPI, the Consumer Price Index.
Yep.
And then you look at public companies and you find just record profits here and there, high profits here and there. Just across the board, people are doing well. These companies are really doing well. And just to be clear, we're talking profits, not revenue. This is what's left over after the companies have paid for labor costs, shipping their products all over the country, all those things that have become more expensive for them too because of gasoline and other inflationary things. But this is profits.
Absolutely. You can't look at just sales. And obviously their sales were up because the cost of their goods to us were up. So we looked at, and different companies report it different ways. Some reported as net income, some reported as gross profits. So these are net income. So we saw, companies like PepsiCo, their net income rose 17% last year. Tyson, their profits rose 6%, which was pretty much understandable. One company that a lot of people don't know about is called Archer Daniel Midland. They do a lot of work in Brazil, but they make a lot of the products that go into the food products you buy. Their 2022 profits were $4.34 billion. They went up 60% over 2021.
Wow.
So they are selling more at higher prices to these companies, which does explain why some of these companies are now charging us more if Archer Daniel Midland made that much. But we also, dug down a little bit. Everyone complains these days about egg prices.
Oh, yeah.
$7 for 2 dozen eggs. It's crazy. One of the biggest egg makers or distributors in this country is a company called Cal-Maine Foods. And they, over the years, the past 10, 15 years or so, they have purchased a lot of the smaller egg companies. So they really hold a major, major share of this market. Their biggest customer, according to their Security and Exchange filings, is the Walmart-Sam's conglomerate, which is, a large chunk of that market. And egg prices from December of 2022 compared to December of 2021, they went up 137%. So they more than doubled. Egg prices for a dozen went from on average in December $4.25 compared to $1.79 in December of 21. So we really took a harder look at that. And, as you mentioned, if companies have to pay more, everything costs more. It costs more to ship, costs more to pack, blah, blah, blah. Cal-Maine Foods, that trend, they can argue that it drives their higher prices. And if their prices are higher, a lot of these smaller companies are going to follow. Their filings just don't bear that out.
I think you're going to say a percentage increase in a second that is going to make people's heads explode. What I read, you tell me if I put a decimal point in the wrong place or something silly, was their net income up 2,000% over a certain period of time?
2,000%.
Wow.
So they filed, we're still waiting on their full year. So what I did is when egg prices were going up, I looked at the 6 months from May to November, which is how they reported it. 6 months from May to November of 2022, their net income was $323 million. The same 6-month period in 2021, they actually lost $17 million. That's a 2,000% increase. And so what I wanted to do was, again, look at what was driving that gain in net income. So I looked at their overall sales. Well, their sales were up 107%. So their sales doubled. Well, that's because you and I are paying more for eggs at the grocery store. Their cost of sales, which is what you were just referring to, so what they have to pay to get things to stores. Their cost of sales were up significantly, 41%. But 41% in cost of sales increase compared to 2,000% net income increase, there's no comparison there.
Yeah.
And then I dug down even a little further into some of their reports. Because one thing that we hear a lot is the cost of feed is really behind a lot of this. Their cost of feed from 2022 to 21 only went up 27%.
So you're just seeing on the one end, it's going better for them than it is for us, it sounds like.
Absolutely.
All right, we're going to take a quick break. When we come back, we're going to hit you with some more numbers that are going to raise your blood pressure, I think. Stick with us. All right, welcome back to the Daily Download. We're with WRAL producer extraordinaire Randall Kerr, and he and his team have looked at inflation at the grocery store, but not just one of the reasons that things are more expensive. Corporate profits are up. I want to hit everybody with some more numbers here. Okay, so this is from the Department of Commerce, the U.S. Department of Commerce. Corporate profits in the non-financial sector, so goods and services that we buy, they hit a record of $2.08 trillion in the third quarter, so that's a quarter of the year, and half of these increases, according to the Economic Policy Institute, that's a fairly liberal organization, but they attribute more than half the increases in inflation, the products we buy, what we pay, to fatter profit margins. And labor costs, they say more like 8%, so more than 50% of the cost, they say, attributable to corporate profit. So how much of corporate greed, best you can tell, is driving the prices we pay? I know that is a big, overarching, in some ways, moral question. But as you look at this, and you've done stories like this over the years, what is driving the profits?
On the surface, you would have to say it is nothing more than greed. Obviously, these companies forecast out. So they may be charging more if they think in the future they're going to have to pay more for their wheat, for their corn, the conflict with Ukraine and Russia. Mm-hmm. But a lot of that's fear-based, and we see the same thing with gas prices. When this happened, when this conflict started, there was the fear that oil was going to go through the roof. So gas companies immediately start raising prices. It's not based on what they've already paid for their goods. It's based on what they think they may have to pay for them in the future. And, 2 years from now, if corn and wheat prices and all of the other commodities, if they stay fairly flat, we're certainly not getting a refund.
Right. That'd be nice.
We're not getting the dividend check. And the bottom line is, and what the financial experts will tell you is, these companies should have more social responsibility, I think, in my opinion, to at least try to keep some of these numbers in check. But the bottom line is they're more interested in making sure that they meet their shareholder demands and pay their dividends, and they're getting increases every quarter.
And shareholder demand is something that, because again, these are all publicly traded companies that you're looking at. Shareholder demand is something that obscures accountability, I might say, because the CEO of the company and the board of the company, and they're just raking in millions of dollars personally, they say, well, I have to maximize shareholder value. I am accountable to the million people that own our stock. Your state pension plan might own some stock. So little old lady who's trying to retire, she deserves that I charge $8 for eggs. It's an interesting system where we've kind of split the wealth a little bit. and split the accountability an awful lot, it seems like to me.
Absolutely. Look, if what we found was, over the past 10 years, because a company raises their goals every year. That's what good companies do. They're in the business to make money. But if it was a common trend where every year their income or their dividends paid out 2-3% more, and it was steady across, a decade, 2 decades, because that's what they were meeting, that's fine. I mean, that's the cost of living, everything, general inflation goes up. But when you see skyrocketing gross profit / net income that are well ahead of inflation, well ahead of even what their forecasts were, I think some of these companies need to look in the mirror and figure out if they're serving the public well.
And there is a movement toward weighing social value a little bit more at some publicly traded companies. It's getting some pushback right now. It's kind of a hot issue. People can read about it, but I think we're going to leave it there. Randall, thank you, and thank you at home for listening to the WRAL Daily Download, making us part of your morning routine. If you like what you're hearing, rate us on Apple Podcast or whatever podcast app you use. Another great way to get WRAL news is the morning briefing newsletter, daily email, waiting in your inbox every day. Triangle news, events, headlines, get you ready for the day. Sign up at WRAL.com/newsletter. Randall Kerr, the producer behind a lot of really good journalism here at WRAL. Thank you.
You're welcome. Appreciate it.